This program is brought to you by Ecobank, the Pan-African Bank.
Good day and welcome. You are watching the sixth and the final episode of Africa's Next Generation. I am Fifi Peters. While this series has previously profiled the role of fintechs in advancing the banking sector, today we will look at fintechs and the transformation of the payments ecosystem here in Africa. This conversation is inspired by the upcoming Ecobank Fintech Challenge for 2023 taking place on the 5th and the 6th of October in Lome, Togo. African fintechs are making significant strides. They're boasting figures in line with their global market leaders. They made an estimated revenue of around $4 to $6 billion US dollars in 2020, according to research from McKinsey as well as other companies. But joining me to unpack this further is Gavin Tipper, the Chief Executive Officer at Arise, Dr. Thomasin Fashina, the Group Executive of Operations and Technologies for Ecobank, as well as the Fintech Challenge 2022 winner, Michael Oluwole, the co-founder and chief growth officer for Touch and Pay Technologies. Gentlemen, to all of you, thanks so much for your time. Gavin, perhaps just to begin with you, sir, your view broadly of Africa's fintech landscape and all the developments that you have seen unfold, but I suppose more importantly, what some of the risks you are seeing in the landscape right now and what your company is doing to navigate them.
Good afternoon and thank you. Look, the risks vary widely, and in many cases, the risks that African fintechs face are very similar to those faced by fintechs all over the world. Particularly, though, I mean, there's a number of key risks one can talk about. The first being competition. Fintechs are often based on unique ideas that lead to unique technology. Unfortunately, there's a lot of competition in the space. There's a lot of people thinking about things, thinking about what, in this context, banks traditionally do and figuring out how to do it better, faster, simpler, so that when a fintech actually starts building something, quite often we see a lot of competition in that space, and that complicates development. A second key risk is capital. Capital is required to scale just about any business, and fintechs are no different from that. They can start off, they can operate on the basis of, contributions by friends and family, but eventually they do need to grow and they need money to do that. Unfortunately, attracting money into Africa is difficult. Africa has its own set of idiosyncrasies. And, by way of example, in the last couple of years, African currencies have depreciated significantly versus the US dollar. So you can imagine if you're a hard currency investor, irrespective of how well the fintech has performed, you might have lost 10, 20, 30% simply on currency. You have regulatory risks, which, vary from country to country. In some cases, they can be complex. In some cases, frankly, they can be slightly illogical. Operational risks, most businesses have those. They need to be identified and managed. And then finally, political and macroeconomic risks. Africa is a volatile continent. There's forever political developments. Those developments affect the macroeconomic environment in which fintechs operate. It affects their ability to operate, affects the ability to make money, and it affects their ability to raise money.
So quite a number of headwinds there that the industry does face. But if we focus on the very first one that you did mention, that of competition, I have heard some entrepreneurs in the fintech space speaking about competing to collaborate, or collaborating to compete, as it were. And I want to talk about collaboration and how your company, Arise, is helping with the collaboration of fintechs and traditional institutions, as well as other stakeholders. Just give us a sense of some of the initiatives that you have on the go.
Oh, look, we primarily are an investor in banks in sub-Saharan Africa. We take minority stakes. We take stakes really with the objectives of generating both a financial return and making an impact on the continent. And by that, I mean contributing to increased financial inclusivity, contributing to increased food and agricultural lending, all of which have been shown over a very long period to contribute to decreases in poverty, to bringing more people, into the net. Because we're exposed to a number of very big banks on the continent, we have an ability to bring the fintechs together with those banks, and those banks act as a very, not easy, but a very efficient marketplace for the fintechs. To the extent you can link a fintech and a bank, it gives the fintech a market. It gives it sufficient scale that it can actually pay its bills, and then it can start attracting other customers. But you're in a very different position where if every month the costs are covered because you've got an anchor tenant, versus being in a situation where you're wondering where the next dollar is going to come from.
So, Thomason, to bring you in, we're going to be hearing from one of the winners of the Ecobank Fintech Challenge in just a short while. But before we do, just talk to us broadly about the Fintech Challenge and the degree, in your view, to which the Fintech has assisted the growth across industries.
The Ecobank Fintech Challenge came about by our decision that with the evolution of fintechs across Africa, that there was no need for us to compete with fintechs, but rather to find a way to collaborate, co-create, and win together in the market with a clear objective of fostering and furthering digital transacting and the adoption of financial inclusion in Africa. So in a bid to further financial inclusion in Africa, we decided to collaborate with fintechs and work together to ensure that those areas where we as a bank cannot reach, either because of regulation or because of a lack of penetration, where the fintechs are better at being able to reach, we're able to come together and work with them to ensure that the individuals across Africa can be included in financial services and benefit from banking services across the world. And that, to a large extent, is what drove our decision to partner and work with fintechs. Now, in a bid to ensure that we are able to come up with the right fintechs to work with, we came up with the idea of the Ecobank Fintech Challenge, where we said, okay, every year we will go out there and invite fintechs to come and help solve problems that we know that exist within our organization. And if they have a solution that helps us to solve those problems and further their cause, we can collaborate with them, partner with them, and give them access to 33 markets across Africa. And we are in the 6th year of the Ecobank Fintech Challenge. We've had several winners, and so yes, while there is an annual winner, it does not mean that if you do not emerge as a winner, it means that there is nothing that we can do with you. Once you get to the finals of it, you are automatically a member of the Ecobank Fintech Challenge, and it means that we can collaborate with you, we can work with you to ensure that what your idea is, what the innovation that you have, can be advanced into and taken into any of our 33 markets or all of the 33 markets, depending on what it is. And we can offer this to customers and new customers that enable us to further the interest of financial inclusion across Africa.
Because I think at the point of departure for most of these fintech companies that have sprung up on the continent in the past decade or so, has been the aim to increase the level of financial inclusion. And Thomason, if I come back to you once again, sir, I'd just like your view on how impactful you think some of these fintechs have been in doing just that.
Today, as we're speaking, from the most recent statistics that we have from the GSMA, we have about 763 million mobile money customers across Africa. And when we say mobile money customers, please remember that excludes the banks. Are customers that are transacting with the telcos. If you look at it now from the perspective that the banks themselves, the banks ourselves, almost all our customers today are doing financial transactions on their mobile phone, using their regular mobile phones to consume banking services. Then we have over 1 billion customers in Africa that are doing one form of transaction on their mobile phone using digital services. So when we say what impact has it had on fintechs, the impact has been phenomenal. It has been mind-boggling and life-changing.
I think the case there has been well made about the impact then of fintechs in advancing financial inclusion. Michael, to bring you in right now then, as last year's winner of the Ecobank Fintech Challenge for 2023, how is your company, Touch and Pay, working together with Nigeria's recent launch of the Lagos State Intra-City Rail System, the Blue Line, that is?
It's been awesome. One of the major things for us is there's a lot of firsts. Is the first metro line in West Africa, and we are also leading the first indigenous payment system for the metro line in Africa, and this is very huge for us. We've been able to domesticate some of the technologies that we've seen in the Western world, and making sure that this same technology can work for our own African people. Understanding our own African reality is huge, and the acceptance is awesome. I wish I could give you some numbers, but I can tell you the numbers are way up in the thousands, even within the first few weeks of the launch. And being at the middle of it, learning, driving transactions has been very, 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 very interesting for us.
And finally, Michael, before we head to the break, how is your business model constantly adapting due to the ever-changing digital and the tech landscape?
Well, I'll answer that question as an African. And one of the things that we've been able to do essentially is not to reinvent the wheel, rather to modify it and make sure that it works better, even for us Africans. And one of the things that we've been able to do is to go and learn other models and adapt it to our own African needs. Today, as I can speak freely, that one of the things that we've been able to do is to install this infrastructure, this payment system, and our model is actually we charge on transactions. And that allows us to do two things. One, to be able to demonstrate that we can actually do this, because there's a lot of doubts, it's an African technology, can it work, and all sorts. So it puts the client at ease to say, okay, I'm not really losing anything. I'm actually allowing you to try this. We bring in the capital, we bring in the technology, and we invest and we install. And that allows everybody to see that, yes, this can be done. And for us, it's been very awesome because, yes, it's been able to show that we Africans can do things for Africa and it can work in Africa. So our model essentially is to provide the capital and invest. We take the upfront cost and we take a percentage of the transactions we process.
All right, we're going to hit pause in the conversation right now to take a quick break. But please do stay tuned to Africa's Next Generation. We'll be back with more after this short commercial break. Welcome back. You are watching Africa's Next Generation, and with me to continue the discussion on fintechs and the transformation of the payments ecosystem in Africa are Gavin Tipper, the Chief Executive Officer at Arise, Dr. Thomason Foshina, the Group Executive of Operations and Technologies for Ecobank, as well as Fintech Challenge 2022 winner Michael Oluwole, who is the co-founder and Chief Growth Officer of Touch and Pay Technologies. So, gentlemen, let's pick up from where we left before we went to the break. And Gavin, just coming back to you, you did set the foundation quite strong in terms of the fintech landscape on the continent and some of the risks that are inherent in it. You mentioned risks around competition, currency risks, risks of capital, operational risks inherent in the fintechs themselves, as well as risks of the broader macro economies. I suppose it goes then without saying that investor confidence in the fintech industry is absolutely crucial to foster further development and innovation. Just your take on that and what you think is required to spur further confidence in the space right now.
Absolutely. Look, when it comes to investment, confidence is a basic requirement. You know, investors take risk by definition, but what you want to know as an investor is your capital is secure on a risk-weighted basis, and that if things perform as expected, the company does what you expect it to do, that you will generate the results you expect. Now, particularly in the fintech space, where often these businesses are capital starved. They need capital, but the only way they're going to get that capital is if investors are confident in what is going on in that space. Now, it's a little bit chicken and egg stuff, but the way you really address it, and remember, there's a diversity of countries, of economic environments. It's very difficult to say, listen, here's 5 rules, let's tie a bow around them, and if you do this, you'll be fine. But just some basic principles. If you're a fintech and you're pitching for money, that sort of old truism of, under promise and over deliver. Your investor puts money into you, and it's a business environment. COVID hits, all sorts of things. Things can go wrong. Investors understand that, but what they want is the confidence that what they see is what they get. That if you're making forecasts, if you're making predictions, those predictions are based on credible analysis, credible experience, credible expectations. It's not to say you're going to achieve them. You may underachieve or overachieve, but that the investor can look at it and say, this is an environment where I'm confident I can rely on what's being said to me. I'm confident that, if I'm told something is possible, it is largely possible. So, it comes down to very, I think, simple business principles. Be straightforward, be transparent. As I said, under promise, over deliver. Make it very clear when you attract capital, what that capital is being applied to, how it's being applied, why it's being applied. Often, depending on the stage at which you invest in fintechs, these businesses take your capital and then suddenly, salaries go up and so on and so forth. Leaves investors feeling vaguely, uncomfortable, and that's not a situation you like. If the company is really committed, if you wish to make those sort of changes, you do it up front, that the investor can be confident. This is what I was told, and this is what subsequently happens, and that confidence creates confidence, and then you end up with more and more capital coming into the markets. Everyone wants to back a successful horse. It's as simple as that. If we can all play by what are just reasonable and sensible rules, confidence in the industry will build, industry's access to capital will improve, and success creates success.
If we stick to the analogy of backing successful horses, Gavin, I'd just like your take on, how many more successful horses in the space there will be to back. Essentially, it's a question on the outlook and the future of Africa's fintech industry and the role that you hope Arise will play in it.
I think it's a fantastic space. I think there's a huge amount of opportunity. As Thomason spoke about a little bit earlier, there's a history of some remarkable companies and remarkable developments, and there's no doubt in my mind that's going to continue. If for nothing else, Africa has a lot of challenges. But, the flip side of challenge is opportunity. And, there are a plethora of opportunities for fintechs out there, for people who are prepared to think about things, who are prepared to work hard, who are prepared to back themselves, and in turn to find people to back them. What's important to recognize is there's fintechs being developed and being built all over the world, but Africa is unique. Our challenges are unique. Our opportunities are unique. So to take a fintech out of Europe or somewhere in the States and try and drop in Africa and say it's going to be successful, well, it may or may not. But our homegrown fintechs group, are built based on exactly the challenges and opportunities we have here. Be it we've got a young population, but a relatively poor population. We've got a need to bring people into the financial services net in a way that doesn't necessarily happen in some of the developed countries in the world.
Thomason, if we just get your view then on the future of the space. You did speak a little bit earlier about some of the initiatives and the growth that you had seen with mobile payments and the growth with digital wallets, and you gave us a bit of an insight into some of the digital innovations that Ecobank had sponsored and also banked in its strategy to collaborate and also co-create, is what you said, with some of the players in the space. Talk to us then, in your view, about Outlook and how you see this collaboration and co-creation ultimately doing what it is intended to do, which is enhance the customer experience.
African problems will be solved by Africans. And we will continue to tap into innovation and the energy of youth that exists in abundance in Africa to foster solutions that will solve African problems. So, fintech will continue to expand as we go into the future. Look out for more unicorns that will come through as young Africans come up with great ideas of how to solve some of the problems, of the many problems that we have, that will not just foster financial inclusion, that will also lift a lot of our people out of poverty and give them a fighting chance in an increasingly globalized world. Fintech will continue to grow, and banks like us, Ecobank, we will continue to partner with the fintechs to ensure that they are in a position to offer these services across our space. We in Ecobank, we occupy a unique position in terms of that we are the truly Pan-African bank. We have banking presence in 33 African countries where we offer banking services. And we run a centralized technology that enables any fintech to plug into us once from one location and can offer services in 33 different markets. That is our unique proposition. And based on Ecobank as a service, we are able to support these ambitions that are coming through from our fintechs. And we are actively in the lookout for these opportunities to ensure that we are able to collaborate and co-create and offer them in the market. We are in the 6th year of our Ecobank Fintech Challenge. We intend to continue this into the future, thanks to Gavin and the Arise team that are partners and sponsors of Ecobank Fintech Challenge. We hope to continue to work with them to further deepen our roots in here. And even beyond that, we have a very active fintech department within our organization that is actively looking for opportunities to partner with fintechs all across Africa. And in fact, globally, because of certain regulations or restrictions, there are services that we as a bank cannot provide. But we are keen and willing to work with partners like fintechs to ensure that the customers are served.
If we just also stick on the rise of digital payments that we have seen on the continent, as Ecobank, what is your stance right now on cryptocurrencies and some of the blockchain technologies that are becoming more and more popular on the continent for a whole host of reasons, as a hedge against inflation, for some being chief among them? So what's your stance on cryptocurrencies and blockchain technologies, and what is your feeling about some of the risks and benefits of these forms of payment?
You know, I'm a regulated bank, and my regulators are probably watching this interview. My regulators frown at cryptocurrencies. So as a bank, we do not offer cryptocurrencies. But I want to differentiate between cryptocurrency and blockchain technology, and in fact, digital currency. Quite a number of our banks led by the Central Bank of Nigeria have actually introduced e-Naira, which is digital currency. And a couple of other central banks are in different stages of either looking into it or introducing it. And we are actively participating in that. Blockchain technology is not only applicable in cryptocurrencies, we use it in the area of trade finance and other opportunities that it creates for us. But cryptocurrencies, because of certain challenges around being able to have a control of it, our regulators are not yet comfortable. I want to use those words, are not yet comfortable that banks should offer them. But we partner with different fintechs. We know they do them, but provided they have a clear ring fence around it and they are able to offer it to their customers without introducing it to the bank or using the bank infrastructure to do it. But we have our sandbox out there where from our sandbox, various fintechs and big techs and agri-techs all come through and they're able to integrate with us to offer services, other services that might use blockchain technology but not cryptocurrencies.
All right. Thank you for making that crystal clear for perhaps any viewer who wasn't aware on the stance of Ecobank and cryptocurrencies, but as well as blockchain technologies. Michael, wrapping up the conversation with you, and just in your honest opinion, how has the access to funding from Ecobank assisted your growth?
Well, it's been awesome. If you listen to our model, which is providing the capital to install to upfront, we couldn't have achieved that if we didn't have access support from people like Ecobank. It's been tremendous. And this has allowed us to be able to push further in deploying our technology across multiple sectors. So if we didn't have access to such capital, we wouldn't be even saying what we're saying today. So working with Ecobank, having access to such capital has been very, very tremendous for us. We appreciate it. It has expanded our horizon. And I remember clearly saying last year when I won that access to this capital is going to allow us to be able to try out more stuffs. And yes, almost 1 year later, we are talking about the launch of the Blue Line Rail. So yes, it's been awesome.
And what else assisted you in getting your business to this point?
Having access to resource has been very, very helpful. So Ecobank, for instance, and I'm using them as a point of example in this conversation, have been able to set up team beyond providing us access to capital, team that will assist us with technology integration, project management, working together to also deploy the technology into the clients. They have some of this resource from clients. So they have merchants, for instance. They have access to the technology. So we, as a startup, bringing in our ideas to complement what they have and allowing us to grow and scale or even put out this idea to show that, yes, it is possible, is very, very, very valuable. I don't think there's a price that can be put on that.
And I think that is a perfect point on which to conclude this discussion. It is, of course, the last episode in our series on Africa's Next Generation. It is the groundbreaking series that has uncovered the inspiring stories of Africa's emerging business leaders. I'd like to thank my guests for today's episode, Gavin Tipper, the Chief Executive Officer at Arise, Dr. Thomason Fashina, Group Executive for Operations and Technologies from Ecobank, as well as Michael Oluwole, co-founder and chief growth officer over at Touch and Pay Technologies. Finally, a big thank you to you, our viewers, and we do hope that you have enjoyed this series. You can actually catch up on the repeats on CNBC Africa as well as Ecobank's YouTube channels and on CNBC Africa's website. From myself, Fifi Peters, it is goodbye for now.